Hey guys, what's going on? Coming at you with a Friday morning video. So I just want to talk about CPI and basically my thoughts and what happened in the market yesterday and where I think it's going and kind of what I was expecting. I didn't make a video the past couple days. Was a little tied up with other things. Make sure this, yeah, that's good. Okay. So expectation, the analyst had it at 8.1% as far as headline CPI. We came in yesterday morning at 8.2%, so that is worse than expectation. However, it is 0.1% better than the month prior. So really it depends on how you look at it. I mean, it's definitely more negative than good, obviously, just because we're coming in hotter than what analysts are expecting. However, the past 2 months it has declined and declined. So I believe it went from 8.6 to 8.3 to 8.2. So the good news is it has gone down the past 3 reports. Core CPI is up. That is what, I mean, that's really what Jerome Powell and the Fed is really focusing on. To my knowledge, I believe they really look at core a little more. So core inflation removes food and energy. However, rents is a large factor in core, and that's why the rating is so hot. So basically shelter, rent, and stuff like that, it's still going up. So that's a problem, and that's like a sticky part of inflation. So that's going to frustrate the Fed a lot because they're raising rates, and they're not really coming down probably because of that. So it's going to take time. I mean, so whatever they do, you have to remember, whatever they raise or whatever they do every meeting, it takes 3 to 6 months for those things to apply. So the Fed started tightening May, so that's what's not even 6 months ago. So even those little small quarter point increments that they started doing in half points, that hasn't even really set into the market right now. So I think they're going to over tighten. They just can't say that. We're in a recession right now. We've already had 2 negative quarters of GDP, but whatever. There's reasons why they're probably not saying that. But we're gonna go through probably a rough winter, and it is what it is. So just be prepared. I'll let you know my thoughts and what I'm buying and what I'm doing as far as what I'm doing in the market, basically. So market panic sold when it opened at 8:30 Eastern time when this report came out. S&P, Dow, and NASDAQ were up a little over 1% pre-market. They dropped to -2, so it had a 3% swing in pre-market. When it opened, the S&P basically hit 3,500. A lot of analysts are saying that we need to see 3,200, 3,000, something like that to really find its bottom. I don't know where they come up with these numbers. I mean, I know they're looking at TA. That was like the top of the 2020 or end of 2019 market as far as S&P. But we've had a lot of good things happen in 2021 and 2020 as far as efficiencies and how to save costs and just innovation to work around things. So people forget about that stuff and they just look at the bad always, but there was so much good taken out of those years as far as how to make companies more profitable, more efficient, and stuff like that. So you're just erasing all that stuff. So it's kind of silly to think that way. I think as a long-term investor, it's better just to look at the fundamentals of the company and see if it is an evaluation where it makes sense to buy and hold for the long term. So that's kind of what I do. Anyways, S&P hit 3,500 for a split second right near open, and it bounced, and then it really kind of just rallied the whole way through the day and finished positive. So you would have never expected that in a million years if you came in with a hotter core, hotter headline, and you were to say, hey, the market's going to finish green today. Most people would have never guessed that. I wouldn't have guessed that either. So that's why you don't really day trade or swing trade, in my opinion. Some stocks I did buy, actually this week I didn't make a video about it, but I did buy Meta at 127.23. This is a top 4 position of mine at this point. I added 5% to my position. And then I bought Shopify at 23.83. I added 10% of my position. So this is probably a top 6 account of the 17 I hold. Mind you, the bottom 3 are extremely small. They're super speculative. It's kind of one of those home run. The 3 I picked are home run stocks. So I really have 15 if you want to, like 15 core holdings, and I have 3, kind of just home run stocks. Dow finished 2.83% up today. S&P finished 2.59% up. NASDAQ finished up 2.22% up. My portfolio finished 2.80, so I outperformed the market minus the Dow by 0.03. Something today, banks are reporting before the bell. We got Wells Fargo, PNC, Chase, JP Morgan. Yeah, Chase, JP Morgan. So all those guys are reporting today. I think the banks are going to do a lot better than what people think. And I think that's really going to bring hope to the market, showing that maybe it isn't as bad as what people are thinking. I don't think we're going to like smash earnings coming out this, in the next coming weeks, but I do think it's not going to be as bad as what people think. The airlines like Delta and stuff like that, they're forecasting a lot of travel in 2023. Obviously, if we're going to like a depression or a recession and people had no money, well, if you have no money, you can't travel. So you got to kind of think about the big picture things, and then from there, look at your companies you own and where you think they're going to settle in that. But if banks are doing well and airlines are doing well, chances are we're probably going to have an okay 2023. That's just my opinion. And maybe even holidays. I mean, a lot of people are still traveling. This was the first full year kind of the U.S. opened up, but not even the whole world. But not everyone traveled the first year. They still could be a little half in, half out, waiting for their money to see what happens. So it's going to be years of high demand in travel, in my opinion. So that's kind of my thoughts. I'm just kind of sticking the course, just dollar cost averaging in my favorite stocks. If they continue to go down, so be it. I'll keep buying them. If they rally up and have a strong November and December, that's great. I can take a breath and I will cash up. So that's kind of my mindset on what I'm doing right now. I am going to talk about what mid-elections, what the market usually does. I actually was looking at a couple of charts and a couple of things, just looking at history dating back to 1954 on mid-elections and prior, on what they did 3, 6, 9, and 12 months after. I'll probably make a video about that over the weekend just because I don't want to smush it all on this one, but it's a very interesting video. So if you're interested in hearing about what happens after mid-elections historically and my thoughts, make sure you subscribe. Trying to get to 1,000 subs by the end of this month. I think I'm at like 940, 950. So all you guys subscribe, much appreciated. Till tomorrow, peace.